Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, September the 14th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember, the past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on with some economic data. I usually don't talk about China's economic data. The reason why is because I really don't believe in their numbers, because they have a tendency to fudge on their numbers a little bit. But interesting enough, their industrial production year-over-year numbers did come in lower than expected, 6.0%, expected to be 6.4%. So I believe that when you start seeing that their economic data points coming out of their government are lower than expected, that they're still maybe fudging them a little bit, but at the end of the day, usually they are always better than expected. So I thought that was a little bit interesting. And then also their fixed asset investment came in at 7.8%, expected to be 8.2%. And that's basically government spending on major infrastructure such as major industrial manufacturing plants and things of that nature. Okay, so and their retail sales came in at 10.1%, expected to be 10.5%. So all of those numbers were a little bit low out of China, which is somewhat of a red flag in a sense, because like I said, usually speaking, those numbers are tried to be fudged to always be better than expected. Now moving over to the European region, Great Britain came in with a couple of things. They had their official bank rate out of the Bank of England. Two of the governors basically voted to raise it. 7 of them said leave it unchanged, so they left the official bank rate unchanged over there. So that's usually a pretty big mover if they have a tendency to move or increase interest rates. That has a direct effect on us, our Fed funds versus the euro dollar and things of that nature. Then on to the United States, we had CPI coming in better than expected at 0.4%, which is Consumer Price Index month over month, expected to be 0.3%. And we got our core Consumer Price Index month over month in line with expectations at 0.2%, expected to be 0.2%. Unemployment claims lower than expected at 284,000, expected to be 303. So that's good for the overall economy, quote unquote. I could go into details about that, but we won't really touch on that. It's not one of the major ones. And then we also got natural gas storages came in 91 billion cubic feet, expected to be 80 billion cubic feet. All right, so that's the economic data. On to the overall markets. We got crude oil moving higher by 66 cents as soon as we got above this 38 fib level and pushed through where the volume node is. The market really spiked higher. We're starting to see a little bit of profit taking coming, but as you can see, the 200-day moving average didn't even hold a candle to the robustness in the overall move of crude oil, but it was up basically $1 earlier on this morning. So on to gold futures. Gold futures are holding their own. They came down, tested the this fib at 78 fib level, bounced off of it. It didn't last much, very long below that, but it did pierce that. If you hadn't gotten out of that GLD trade, it probably is a good time to start looking to cover that one there. And I will talk about, speaking of, forgot to talk about, I am going to talk about USO in that trade that we have had on for a little while there in a minute. But bonds, slightly in positive territory, only by about 2 ticks, unchanged for all intents and purposes. The gold market, bonds are really having a tough time discerning what's going on because we've got a mixed bag with the overall equities. VIX is coming off, which isn't very alarming. It's only down by a few pennies for the most part, but this is what I'm talking about. The Dow Jones Industrial Average making a new all-time historical high right now, slightly off of that by about 3 or 4 ticks. 22,212. Well, darn it, I just had these hats made and it came up just a bit short. No, just another arbitrary number, but I thought it was kind of funny that it was very close to 22, 22, 22, ... But anyway, thought that was kind of funny to throw that out there, and had those hats made up this morning. But Dow Jones is up on the day, where we have the NASDAQ down on the day, and that's kind of the push and pull we're kind of seeing here lately with the overall equities. The Dow Jones is up nicely. We're seeing a bit of pullback from the tech sector, if you will, rather than the blue chips. So we're starting to see that push and pull where there's a lot of rotation, sector rotation, if you will, coming from the Dow and pushing into the NASDAQ and things of that nature. But the Dow up on the day, the NASDAQ down on the day. Yesterday was just a boring day to not really even talk about, it seems like, but that's the situation we're seeing here in the many S&Ps. They did make a new historical high today, and that was what we were talking about yesterday, where the overnight historical high came in the overnight session. So I talked about that. These guys are going to want to print that in the day session and kind of trump that. And that's what we're seeing today. So coming up short of the E-mini S&P 25,000, which is just another arbitrary number. Maybe I should have had a hat made up for that. But coming up slightly shy of that before starting to see a little bit of profit taking going on today. On to a few trades that I've done. This AT&T trade, if you remember, I got into this trade not very long ago. I thought it would kind of bottomed out, started getting to move higher. Well, I've gotten volatility to collapse on me. We also got the directional bias, or the directional move that we're looking for in a trade like this. And in AT&T, I had on the October sold the 34 puts, and I sold those for 40 cents, but today I was able to get out for 15 cents. So with that volatility contraction really happening today, despite the fact that we're seeing a bit of a pullback in AT&T, yesterday's move combined with today's volatility contraction, was able to get out of that for better than 50% of my max profit. So AT&T I took off. I didn't have that in my IRA, so I didn't have to really worry about that there. USO, with crude oil popping higher today, it allowed us to get out of our long call spread right there at 50% of the max profit on that. And I did both of these, or did this trade in both my IRA and in my margin account. And I did the October 8.5, 10.5 call spread in there. And I originally paid just slightly under $1. I paid 95 cents for that. Was able to get out for $1.50 in both accounts there. So out of the USO trade in both my IRA and in my margin account, nice little gap higher in that, helped that come to fruition as well. And it tested those 10.5 calls early this morning, which also helped. Now with MGM, I am very close to covering this trade. It's not quite at 50% of max profit there, but in this trade I have on the October, and I am long the 36 puts and then short the 31 puts in there. And I originally paid right around $2.45 for that, so right around that 50% of my max profit. Now I should be able to get out of this. 50% of max profit would be right around covering this trade for $3.60. But I've only had this trade on for 5-6 days. I put that trade on the 8th. I've gotten the directional move here, breaking down. It's very close. At the end of the day, I always talk about, do you want the penny or do you want the trade? Well, in a situation like this, I talk about this all the time. Long put spread, long call spread, those are low probability trades, right? So anytime you can get close to that 50% of max profit, especially in a very short period of time, it's really time to say you've beaten the probabilities. And in this case, I'm looking to cover this trade for $3.50. So just slightly over $1, giving up about 20 cents to the P&L, if you will. But at the end of the day, I'm looking at it like this is going to act as resistance, or support, I should say, as the closer we come down there. I think I'm going to look to cover this. I have an order in right now in MGM to cover that for $3.50. So I'll let you know if that happens today. If I have to wait till tomorrow, I'm probably going to move that out to $3.60 and then be really itchy on the trigger finger to pull the ripcord and or whatever other thing you want to say for that. I can't think of a good word for that. But anyway, pull the ripcord or have an itchy trigger finger on that trade. All right, so that's about it right now. All the other trades I still have working right now, or still have on, I should say, with my Bank of America, my MasterCard. Those aren't really working out very well, but I'm going to leave them on, play with probabilities. I do have a couple working orders, but they're quite a ways away, so I don't really expect those to get filled anytime soon. And that's about it so far. I haven't added any new trades to my portfolio, and I haven't really seen anything that really is sticking out at me. So that's about it for that. Friday's webinar, which is tomorrow, we're going to be doing the long straddle, and that's going to be a really good one. We're going to have to talk about the certain timing and environment in and around the underlying we want to set this strategy up with, because it is imperative we set it up in the right environment in order to be successful, or at least roll those probabilities into our favor, because right now probability strategy like this isn't necessarily in our favor in any given environment. So go to ProTraderStrategies.com, sign up for that. It's a good one. I think you guys really need to know this information, because if you just go online, you're not going to really be told what strike location, what environment, and all of those things in and around the nuances of implementing a long straddle, right? That's all I got. If you can't take that, take it easy.